Hello and welcome back. Yesterday on Twitter, I noticed that some people might have problems with selling the stocks at the ideal time. And this problem never occurred to me because I know my exit strategy at the time that I buy a stock, and I'm a long-term investor. And I will show you how I do that with my Excel sheet, but I won't share it because it has kind of confidential information. But I'll show you the system that I use. And this is my sheet, and it's a bit messy, but it isn't meant to be shared. First of all, before I hide these tabs as well, I use fixed rates and I calculate the free cash flow forwards for 10 years, and I estimate the growth within the first 10 years to be 5% per annum, and then the growth that is infinitely is 3% per year, and I use a discount rate of 7%, which is a safe rate of return estimate, and it's usually like the bond, which is a very safe return, which should be like 1% or less currently, but then the numbers get too big, and so I took a safe rate of return, the S&P 500 after tax, the 7%, which are historic value. I calculated this, and it's very conservative. Then I take the stocks, the notes. This is how much the free cash flow projected forwards to the market cap is, and then the safety one is how much this worth is while I remove all of the debt that the company has. Then I have debt to free cash flow ratio, how many years it would take to pay off all of the debt that the company has with the yearly cash flow that they currently have. Then the metric in the middle is the safety measure divided by the debt to free cash flow ratio. And the higher this one is, the safer the company is, more or less, in my opinion. Then you can see that these ratios are like how much your investment would turn into. And now I'm going to hide all of these ones, the top ones, so I don't show anything on the side. And for example, this stock has like 5k safety return, and now it's like at 2000. So it means that every dollar I invest should turn into 22 US dollars over the next 10 years. However, it's in stock price appreciation or in dividends or in a combination of both. And I use a Gordon growth model. Then I add the net present value, and then I have the new net present value. I subtract all of the debt the company has, and then I have the compounded annual growth rate that the stock has, and I import the free cash flow. Then I build an average. Then I multiply it times the static values that I had shown previously at the start of the video. Then I build an average of the debt, and I assign a higher value to the current debt compared to the debt from before, but I'm still building an average with the most recent one being the highest value or has the strongest influx on the average debt. And I transform all of my currencies. If it's a euro or Canadian dollar, then I transform all of the values into US dollars with the exchange rate. And if a stock that I own appreciates a lot in value, and with this kind of formula, I know what's a reasonable price from the free cash flow perspective of the stock, then I can completely ignore all of the hypes and Wall Street bets. And with this formula, I know when a stock appreciates a lot in value and I own them, then I can see how much they have future potential over the next 10 years. And for Thor Industry at the time in June, as you can see here, the stock price was around at 120 US dollars. If you look at the 52 weeks high, and I want to sell it at 120 because my future estimate over the next 10 years would have been they only gain like maximum double the amount, so 240 US dollars over the next 10 years with the data of the time in June. So I wanted to sell the stock, and then it kept falling back down again to like 90, and I was able to sell them at 97.5 US dollars per share instead of 120. So it was still okay. And I hope this small insight helps you to figure out how to sell a stock properly in the future as well. And I hope you understand why I won't share this tool, because it's my mode, more or less. and had to invest many hundreds of hours into this worksheet. And I hope you still learned something from this. Thanks for watching. As always, please like, subscribe, and share it with your friends. Also hit the notification bell. And until next time, bye bye.